Good morning, everyone, and welcome to another Elliott Wave Forecast video blog. My name is Eric. Today is the 17th of January, around 3:30 p.m. Eastern Time. And today we're gonna cover a topic which is a very interesting one, by the way. That is, which one is a better trade, buying gold or buying silver? Many traders believe that gold to silver, even though they trade the same size, they always provide the same return to investment. And that's not the case. We track in Elliott Wave Forecast, we track an instrument which is called the gold to silver ratio. And this is the gold to silver ratio grand super cycle chart. In this chart, we see how the ratio has been trending higher over the years. And in 2020, the ratio reached the 100% extension from zero to the peak in 2008 to the low in 2011, and it reached that blue box 100% area. The reaction from the blue box is very interesting. Why? Because from the blue box in 2020, the reaction sinks in %. I want you guys all to understand that the ratio, the gold to silver ratio, trading lower, it means that silver, it will outrun the gold to the outside. And that's what we are suspecting at this moment. This is the reaction from the 2020 peak. And we can see that 1, 2, 1, 2, 3, 4, and 5 in blue are completed here with the 3, the 4, and a 5. So technically, it means that the ratio did 5 weeks from the peak. That means that this decline that we are projecting in the gold to silver ratio, it will happen in 2 ways. Either from the current area right here, or it will retest the lows and it will react. The gold to silver ratio is gonna trade lower. That idea only is telling me that I need to be a buyer of silver instead of a buyer on gold, because at the end of the day, I will get more for my money in buying silver than buying gold. This is an example that I want to show you to you guys. For example, this is an ETF of gold, right? From the grand super cycle, 1, 2, 3, 4, 5. But from zero, right here, from zero in the grand super cycle, let me contract the chart. From zero right here, within the grand super cycle, we can see how little of a pullback the correction within the grand super cycle was. It's only the 23% from zero to the peak that happened in 2020. Only 23.6%. This is an ETF of silver, in which we can see that from zero, the correction went even past the 76.4 pullback. This is another ETF of silver that it will look at the retracement from zero. The correction also reached the 76.4. What I'm seeing in the charts of the ETF of silver and gold, it makes sense that gold is ahead of silver due to the fact of the gold to silver ratio extension to the outside. By now, understanding that there is 5 weeks from this peak, and understanding that the gold to silver ratio, which after doing 5 weeks lower, now it did 3 weeks pullback, and it can renew lower here. It is telling it can do this, or the other way around is that it's gonna do a 7 swing lower but lower. Either way, in this scenario, I got no doubts in my mind that the gold to silver ratio is gonna trade lower. And consequently, when I look at the daily charts of silver and I remove the label, the reaction here from the lows at the blue box in 2020 agreed with the hit of the gold to silver ratio here. So I'm calling silver higher, right? After 3 weeks put back from the peak in 2020. But when I remove the labels and I put, let's say, the quarterly chart right here of silver, is telling me that the upside is gonna be much bigger in silver than the upside that is gonna be in gold, which is also reacting after 3 weeks back to another blue box from the correction in 2020. The meaning of the whole video is to make traders understand that the relationship between gold to silver in relation to the dollar is gonna be in favor of silver. So it's better to buy silver's ETF than gold ETF. It's better to buy, as an example, LSB than buying gold ETF. It's better to buy LSB than buying, for example, GDS, which is another gold to silver ratio. Why? Because if you notice, this one bottom here, this one bottom here. So this one is ahead of this one. So we are in favor of buying silver instead of gold, and that's why in our live trading room, we are in favor of buying gold and silver instead of gold. Our members, they were told to buy silver, right? They were told to buy silver right there, and that's why you can see here that we long silver for the we are long silver for the 2308 area. In other words, that we are silver from around these areas right here. And the reason is because we believe that silver, it will outrun gold. So this is the type of analysis that we do in Elliott Wave forecast. We do a multi-market analysis to determine which one is better, a long silver or a long gold. Even though both are going to trade higher, it's clear that one will outrun the other. And in this case, based on the gold to silver ratio, we believe that silver, it will be a better way to buy the commodities than gold. That's all for today. If you like the video or you like the analysis, please join right here, Elliott Wave Forecast. We offer a 14-day trial for $9.99, and you will get used to this deep analysis about the market. Hope to see you guys around. Hope you guys enjoyed the video. Have a good day, everyone.